freedom isn't the result of wealth. It's the foundation. Welcome to Wealth Independence, where freedom leads and real wealth follows through battle-tested strategies, hard-won lessons, and real-world experience. You'll discover how to accelerate your path to true financial independence. And now your hosts, Dustin Bailey and Adam Penn.
All right, welcome back to the Wealth Independence Podcast, where freedom leads and real wealth follows. I'm Dustin Bailey, and I'm here with Adam Penn. Adam, how you doing?
I'm doing great today. Excited I really don't know what we're talking about today, but you got an article pulled up here about retirement savings. So I'm guessing we're talking about, cash flow versus equity drawdown. What was your email article about? You can't eat equity.
You can't eat equity. Yeah. No, this was that's funny. That should actually be kind of a game that we start playing here, where I try to get you to guess what topic we're going to talk about. But no, so I came across a handful of articles really within the last month. And I save stuff off. I see things, I'm like, oh, that might be interesting. That might be something we could talk about, or something I could reference in the future. And so I keep some of these off, and every now and then we're preparing for the podcast, I'll go through and see if any of them are worthy of talking about. And what was interesting is there were kind of three that had gathered again within the last month that were on the same topic, and thought it might be good fodder for conversation here. And so especially, with you coming in cold to this, I'm definitely curious to hear your thoughts on some of this. You've got no prep. You don't know what these are, what the topic is. So we'll dive right in. This first one is, it's actually some research from a group, Clever Real Estate, Clever or something or other. I first saw this on Housing Wire. Housing Wire ran a story on it, and it got me looking into the actual research. And I'm very interested in the whole idea of retirement. That's a thing that I'm very passionate about, and that I wish that had been explained better when my finance education, like the whole concept of it. I think
because you're lazy, that's why you're interested in the
retirement? Yeah, that's exactly what I'm ready to fast forward right to the end there.
Yeah, that makes sense.
But no, it wasn't until I was, and maybe this is just me where I was slow and didn't pay attention. Maybe I should have gone to class more, but I appreciate you shaking your head on that one. I didn't fully realize the whole model of retirement was like drawing down a nest egg until I was well into working my first job. And again, I've told the story about, trying to research retirement options, and, the difference between a traditional 401k, and Deloitte also offered a Roth 401k, and I'm researching the differences between those. And again, I forget which one it was, but it was like, if you're going to make less money in retirement, choose this option. And I just remember thinking, why in the world would I want to make less money? That seems weird. And I'm like, okay, I'm misunderstanding something here. That can't be how this works. And so, that kind of started the whole process of me fully understanding this. And it just I never understood it. I'm like, why this whole model seems just entirely backwards to me. And, it wasn't until later that, kind of came across and was really able to fully articulate all of this, and okay, I need to be buying cash flowing assets, and that provides the retirement. You live off the cash flow. You don't grow this nest egg and then draw it down. And so anyway, I obviously, you can tell I'm quite passionate about this. And so anytime I see articles or I see things, especially in mainstream financial publications about this, I'll save them off. And I'm always interested to see what the mainstream thinking is. And it's almost always what the mainstream thinking is. It's the standard advice. And, people like us are sort of looked at as weird by people in that realm because we don't follow it. And we think that it's wrong and different. It's not really the best path. But
the part with that's really interesting to me is that we know a lot of people who I would say are in retirement, but have gone down more the cash flow strategy, right? I mean, I was talking to a couple back in June when we were on the Investor Summit in on the ABC Islands, and this couple literally said to me, they're like, we just don't know what to do with all this money, right? Because they're like, every month we pay off another house and we get more cash coming in. We just don't know what to do with it. And that's not what you normally hear from a retirement, right? So this actually kind of snowballs.
Yeah, I mean, you're exactly right. It does snowball. And it's one of those things that as you continue to, especially if you go down this path, it becomes, it's a treadmill you can't get off of, but in a good way, right? Like you don't want to get off of it, and it keeps going faster and faster. as opposed to kind of the exact opposite, which is sitting there watching this nest egg and watching that number get smaller and smaller and constantly worrying about it. And I've got a couple of other articles, and this research here speaks exactly to that. So I think that's an excellent segue into this. But I thought that this study was, again, it kind of proves that point, right? Like the headline here: half of retirees worry they'll outlive their savings. I mean, this is a very serious
Not a
fear.
small percentage.
Yeah, it's not small at all. And I've talked about this. I witnessed this happen, right? I witnessed my grandmother outlive her retirement, and then it as her health is failing. And then that leads to some really, really tough choices. And so, I mean, this is one of these things that when you're younger, and especially our age, you don't really worry about it. But if at the same time, if you don't start planning for this when you're young, you don't have time for a lot of the compounding to take place. And especially if you go about it in the wrong way, then you really set yourself up for a challenging, and this whole concept of retirement is like, well, you're free, right? You've worked. This is your reward now. And yet, one of the things that comes through in this study, and then in a couple of other articles here, that people end up spending a lot of that time in fear. Fear of running out, and in some cases it's completely unfounded. In other cases, they actually should be afraid.
And I don't know if this article goes into it, but one thing that I just thought of is that if you're living on the cash flow side of things, right? Even if you go into retirement with a decent amount of debt, let's just say you still have a mortgage, maybe you recently purchased a home, your final home or something like that, and maybe you have a new car, things like that. I find that people that are living off that cash flow model, right, because the dollar keeps getting worth less and less, actually end up paying down debt faster and faster, right, which just compounds the amount of cash flow they're getting, right, because they're able to take all this cash and excess cash and pay down the debt. And it's not like, oh, well, it's equity that I need to use later on, because their equity is still there. And then, God forbid, something major happens, they have assets they could sell.
Yes. You're exactly right. And that's one of the things here. And I do want to couch this. We talk with a lot of wealthier people, right? Folks who would generally be considered in the 1% in the U.S. And so I think most of this article is not that demographic. As you can see here, I mean, the average retiree was surveyed just had over $308,000 saved, right? And for especially a lot of folks working in tech, that's less than 1 year's salary. So some of these numbers and some of the things here, I think might speak to just from an income and from a wealth perspective, lower demographic. But at the same time, the psychographic and the way that the people think about things, that tends to not change. And you can approach things differently. And I also think this is interesting. The data in here is interesting for if you don't approach it in the right way, the position that you could end up. I mean, this is crazy to me, right? More than 1 in 4 retirees, 27%, say they have no retirement savings. Nobody has done anything. And so, obviously, I think that the traditional nest egg method of retirement is a suboptimal way to go. But man, it's better than nothing, right? At least have something there. But I won't go through the full thing. There's a lot of data points in this, but I think the big thing is that there's a lot of folks who waited like they were too late. You got almost half here, 46%. Didn't start saving, didn't really start thinking about this until they were 40 or older. This point here will speak to another article that I have. A majority, 53%, prioritize preserving their finances over enjoying retirement, which speaks to that whole idea of when the whole premise is drawing down a nest egg, you are naturally going to be worried about running out of money. Like it's inherent in the model, right? I think the other big thing in this, there's some talks about real estate and the amount of debt that they carry, the ability to cover emergencies. Like 2 and 3 think the United States is in a retirement crisis. What was shocking, it's not in this, but there's another data point in here that talked about how many people expected the government to be able to provide for their retirement and thought that Social Security would pay for everything, and then they end up at that point and they're like, wait a second, that's all I'm going to get. So that speaks
no
to the whole,
knowledge of what it's going to give them.
Yeah. So like you can't put, when it comes to like your future, you can't trust in the government, right? It doesn't matter like who's in office, what's going on. Like that's That's one of the most dangerous things you can do. Like, you have to take ownership of this.
And that's what Kiyosaki talks about a lot in cash flow quadrants. Even he talks about that with understanding where you earn your income from and being an educated investor.
Yes, 100%. And hopefully you're not relying on a significant part of your income to come from the government, which is, again, a losing proposition. We'll obviously link this in the release notes, and it's interesting. I think this is a really interesting thing for anyone that's passingly curious about this to scroll through. But this very last thing here, I thought, doesn't really have to do so much with retirement, but there's a lot of talk about the silver tsunami in several different ways. One of which being, there's all these people are retiring and they're dying every day. The boomers are dying and their houses are going to come available, and there's going to be all this inventory just absolutely flood the market because they're either dying or they're going to downsize or something's happening, and that's just going to depress home prices. And this really stood out to me, right? Do you plan to downsize your home in the future? No, 68%. This tells me that the entire premise of boomers selling their houses and moving to retirement homes or assisted living or whatever, they're not going to be doing that willingly, right? Like, you've got a lot, this idea of aging in place is obviously clear from this, right? People are not planning to downsize. They will only downsize if and when they are forced to. So I don't think that for the folks that beat the drum about, there's all this inventory that's going to come and it's going to depress home prices, I just don't think it's going to happen. And this is yet another data point that would support that. I don't know, Adam, any other thoughts on this one? I got a couple more related articles, but any other thoughts here?
We can move to the next. The only other thing I'll add on that chart right there is just that there's only 3% that says within the next year, and I'm guessing the rest of those people are actually have been saying, in the next 1 to 5 years or 5 to 10 years from now for more than that amount of time, right? Like, they're not actually going to do that. So the people that are saying that 3% are the people taking action. And so that means it's such a small percentage, right? I wouldn't count more than 10 years from now. That basically is the no, I don't plan on moving, right? Because yes, I plan on moving too in the next 10 years. I don't know when or if it will happen.
Yeah. You don't know when, where, any of the details. Totally agree. Okay. Keeping on that topic, this was the second article that I found. This was in the Wall Street Journal about a month ago. And again, speaks directly to this. Even rich retirees fear outliving their money. So it's not just the folks that only have $300,000 saved for retirement. And again, we'll link this article. Thought it was super interesting that regardless, it seems, of the amount of money saved, people are worried about outliving the retirement. And again, I think that's just inherent in a model where you are designed to burn down a nest egg. There's some stories here. Wall Street Journal always does a good job of finding people to interview for stories like this. And I mean, there's an example here of a couple that the guy was, freaking out about how much they were spending, but then he actually ran the numbers on his retirement. He was like, we can spend a lot more than that. And then realized that, okay, they didn't have to be penny pinching as much as they were. But again, the point is simply because when you sit there and you look at that number get smaller, or you're drawing from it and hoping that market gains and market returns are going to push it back up or will keep it elevated. It's just human psychology, right? Of course you're going to be worried about this running out. And so naturally when you're worried about something running out, you start using less of it, right? My sriracha, there's a sriracha shortage right now, and my sriracha bottle is getting a little bit low. So I'm using less and less on each of my meals right now. So like, it's just, this is human psychology, and it really doesn't matter if you've got, $300,000, 3 million, 30 million, like, you're more than likely going to be concerned in the back of your mind about that number going to zero.
Well, I think a lot of that also stems just on the psychological standpoint, because if you had that amount of money, you went into retirement with that amount of money and making money that was equivalent to that and spending money that was equivalent to that, right? Someone going into retirement with $300,000 of savings lives a drastically different life than someone going into retirement with $30 million of savings.
For sure. And I usually I don't think too many people that go in with 30 million in savings, usually they're not drawing down a nest egg. They've got cash flowing assets, right? Like that's. But
that speaks to the total difference, right? Because those assets are where the wealth is created, and so that's how they were able to go into it with $30 million of assets. And the other thing that came to my mind a second ago was that when I look at my balance sheet, right, I never even think about drawing it down because our assets are not like that's not where my money comes from, right? My money comes from the cash flow. So every month I spend a bulk of the cash flow that comes in, but that's not the value of it, right?
Yeah.
The value is the equity there, and that I can roll from asset to asset or move around as it makes the most sense. But the yield and what I'm able to live off of is totally separate, right? And I mean, even on a simpler example in real estate, the credit fund that we run is just cash flow, right? We have high yield notes that we invest in, and our investors are paid 10 to 12% annually. And then, assuming nothing goes crazy wrong with the notes, the underlying notes, then their equity comes back, right? It's not a depleting baseline.
No, and that's the exact point. That's the total mindset shift. And I think it wasn't until that day sitting there, my like second or third week at Deloitte, when I was like, well, this can't be right. Like I knew that this didn't resonate with me, but I didn't understand the frameworks and everything that I understand now to this whole idea of, again, the Robert Kiyosaki model of owning assets, which are things that put money in your pocket. And so that's going to be cash flowing assets. And that just unlocked, this whole, for me, that was one of the reasons Rich Dad Poor Dad was very transformative, was because it put a lot of it put words to things that I'd kind of always intuitively known, or things that I felt like didn't make sense, but I couldn't really, put the words to it. But that's exactly it, right? It's a different model when you are looking at, okay, if I have these assets and they can produce a certain amount of income, how much of those do I need to get? As opposed to being worried about, well, I need this much so that I can draw this down, right? Because more than likely, if you go the other way, like one is like going the asset route, it almost stays elevated, right? As long as you make good investment decisions, things that aren't going to lose that principle, like it at least stays here. If you don't then use all of the cash flow, well, it just keeps going up, right? Like you actually get more.
And if there's appreciation, even if you take a hit on one of them.
Exactly.
Right? And that comes back down to risk mitigation and portfolio sizing, right? If you have less than 10% of your portfolio in any given asset, then you're not really at that much risk, right?
Yes.
In my opinion.
If one goes completely to zero, which again is another reason we really like real estate. Obviously now that can happen if debt's involved in some other things, but I like investing in real estate because it's always worth something. You can put crazy structures that would effectively wipe out the equity, but the underlying real estate has value. Even if you end up overpaying and things go wrong. So, we're covering a lot of topics here, but those are really the two things. I had a third article. We might link to it. It's just it was in the Wall Street Journal. It was titled "The Financial Regrets and Wisdom of Americans Over 80," and it just it's more stories from folks over 80 who kind of said, well, I wish I had saved more. And again, speaking to the whole, well, they were worried about burning down the nest egg. And of course, if you wished you would, if you're worried about burning that nest egg, you're going to wish that it was bigger. So I don't know.
But I think that always comes back to psychology, right? You always want it to be bigger. You just don't necessarily have, you're always gonna have that mindset that you don't want to dwindle it down. So if you you got to switch your mindset right over to the cash flow.
Right. Yeah. I mean, you would always want the pile of assets to be bigger, but I think depending on whether it's the nest egg or the cash flow, the reason you want it to be bigger is different. If it's the nest egg, you want it to be bigger because you're like, well, that's just that much longer I can live. Right. Like you're like, I'm not going to worry.
I think no matter the size, right, it's going to get smaller. So you're always having this mindset that it's shrinking. Right.
Yep.
And then the second side of this that we haven't really even touched on that I absolutely hate is the thought that you have nothing to pass on to your children. Right. Like why do we spend lifetimes building something and then give nothing to our kids? Right. Yeah. When I have a kid, I'm going to buy a house when they're born, and it'll be theirs when they turn 18. Put a 15-year loan on it. Yeah, I'll probably put a 30-year loan on it because I like debt. But put a 30-year loan on it. It'll have a bunch of equity in there by the time they're 18, and it'll have cash flow. Right. Yep. It's the same thing. I saw something a while ago. If you got a family business, right, raise your kid to work in the family business. Give them a house when they turn 18, and then give them the business.
Yeah, I mean that's like. It's much harder. It's a lot easier, or it's a lot better to obviously you can pass down a retirement portfolio, right? If there's some left, but isn't that a lot more powerful to think about passing down a cash flowing asset, like something that was there, is still going to be there, is not going anywhere, is still going to continue spitting off cash. That's this very, very tangible thing that can be passed down to future generations.
Able to support you through the final days of your life, then it's easily going to be able to support your kid, right? Yep. And now, then that just snowballs.
Yeah, absolutely. Well, we could probably continue beating this horse. Obviously, we're both passionate about it. But I don't know, Adam. Any closing thoughts? We can kind of cut it off there.
No, I think that was great. Okay. Obviously, reach out to us if you got questions or you want to have a discussion about this. Talk about ways that we invest. We've got oil investments that we do. We've got the private commercial credit fund that's taking investments right now. So it's got about 10 to 12%. I think I mentioned that earlier. So we've got options out there if people want to chat about it.
Yep, absolutely. All right. Well, thanks everyone for listening in, for watching. However you're taking in the Wealth Independence podcast, we appreciate it. Just remember, where freedom leads, real wealth follows. We'll see you next time. Thanks, everybody.
Thanks for joining us on Wealth Independence. This show is for informational purposes only and is not financial, investment, legal, or tax advice and does not constitute an offer to buy or sell securities. All investments carry risk, and investors should always conduct thorough due diligence and consult with qualified professionals before investing. Until next time, remember, freedom leads and real wealth follows.